Good morning, everyone. Thank you very much for joining us today. My name is Nicholas Reid from Reid Corporate, and on behalf of Ausgold, ASX ticker AUC, a very warm welcome to this special investor webinar. Today's presentation follows the release yesterday of a significant resource upgrade for Ausgold's flagship Katanning Gold Project, located 275 kilometres southeast of Perth in Western Australia, to just over 3 million ounces. The Katanning Gold Project is one of very few new open-pit gold development projects of scale in Australia at the moment, and yesterday's resource upgrade well and truly cemented that status. In fact, Ausgold has added over 2 million ounces to the Katanning resource base over the past 4 years, establishing it as one of the most exciting growth stories in the junior gold space on the ASX. To run us through the significance of the resource upgrades and where Ausgold is headed next with this exciting project, we're delighted to have the company's Managing Director, Dr. Matt Greentree, join us this morning. Matt will step us through the company's presentation, explain the significance of the resource upgrade, and tell us what's next for Ausgold. Once Matt has finished presenting, we will open the floor to questions. Don't forget to use the Q&A tab on your browser to log your questions. And please do so while Matt is presenting so that we have time to put them to him. Matt, it's great to have you here this morning, and thanks very much for your time. Welcome, congratulations on the announcement yesterday, and please tell us what's next for Ausgold.
Yeah, thanks, Nicholas. It's really great to be here today and to be able to talk through, which was a fairly significant resource upgrade yesterday. What we've done over the last several years and over the past couple of months, particularly with this resource upgrade, is demonstrate that this Katanning Gold Project is a large open cut development gold project located just south of Perth. We've really put a lot of effort into the understanding the geology, but also now working with our consultants at Snowden Optiro, understanding how better to present the resource and understand that resource. So that's been a critical upgrade to the resource as we go into our definitive studies. On that front page that you can see there, you can see what is the Jinkers Hill, which is the key to this central zone. And there's been a lot of drilling in there, particularly focused in on that Jinkers South Lode, which was really key to that big step through from the million ounces up to the 3.04 million ounces that we're reporting today. So that expansion of the project is really encapsulated in that picture there as we're drilling that out, that part of the ore body. We're really excited about what we're doing here today. It's going to inform the DFS, and the expanded resource estimate, I think, is really key to that. So this is just really a bit of background. I know most of you are probably familiar with the story, and I'm glad to see you following us, but today's announcement, or yesterday's announcement, was reasonably significant, adding over 400 or up to 400,000 ounces. We're over 3 million ounces now, and importantly, we saw the grade go up, and that was large part of that new drilling, but also a lot of the work that we did internally, but also with our consultants, Snowden Optiro. We validated this resource. We looked at it a number of different ways, as well in terms of different estimation techniques. So this is a very robust resource update. We've lowered the cutoff grade from where we were this time last year, but we're still seeing a reasonably good grade as well. And that's going to support the large 5 million tonne operation that we envisage for the definitive studies. We hope to see an expansion of the current 1.28 million ore reserve in that study as we're building out the resource and also supporting a higher grade operation than what we did in our scoping study a few months ago. But I guess importantly, this isn't just a flash in the pan project. It's at least 10 years. We expect to see it live longer than that. We're continuing with our exploration success, as you can see with the resource upgrade yesterday, and really looking at the economics here. High grade will improve the economics from what we saw in that scoping study. So really going forward, I'll take you through the resource itself and that announcement. We've got a slide here really looking at what happened over the last last few years. And there's a couple of key points in there where we've seen the resource grow. And we mentioned in there over the last 4 years, we've had a very low cost of discovery of about $11 per resource ounce. Part of that was some well-placed drilling. There's a lot of good science that's gone into this resource and some of the past resource announcements. This one is building together those past resource announcements and really tying that new knowledge together and that understanding together. So we've got a very high portion measured and indicated because of that. And in itself, the measured and indicated component is a very large resource base, and that will underpin the DFS. It gives us good knowledge and good understanding and confidence in that. It'll be important that will convert, or a portion of that will convert to the ore reserve, which is separate to the resource, but comes from that. But we also know that there's a large component of that resource as we continue our exploration and development work that will convert into reserves in the future. So we're very confident in what we're seeing here. The increasing grade was really pleasing too, and that was a large part of a fresh look at the resource, a change in estimation styles. It's actually something that's a little more straightforward than we were doing before, and we've moved from an indicator approach to simple ordinary kriging, but with much better geological modelling underpinning that. So that's a subtlety that wouldn't have come out in the resource announcement, but is quite important. And I think even within that, we see a lot of conservatism. So that's good to have, right? Going into the future, some new drilling, and also when we go into mining, we expect to see some good reconciliation from this model as we go forward. We've also, I guess more for consistency, we've included the underground resource component, and we see that as a potential for the future in two ways. Depending on the scale of the open pit and the stripping ratio and the gold price, that could either be an open pit resource or an underground resource. What we see with the current PFS level studies is that we get our deepest pits down to about 220 meters, which is well within this resource envelope. But with the higher gold price pits, we also see those pits open up to much greater depths. And that would include some of what we're calling underground. So what we've done, we've used only the highest cut-off grade material for the underground resource, but my suspicion is that a good portion of that will be in an open pit in the future, with the exploration upside chasing that high-grade plunge to depth. We see that with the downhole EM and some of the scout drilling that we've put in there over the past year, that we see that there is continuity of this high-grade shoot that we call Jinkers and Jinkers South that extends to the northeast. And I think this is something really important for the future. A lot of the work we've done on this resource is honed in what we call that Jinkers South area in the central zone. We see some opportunities in the Jackson and Olympia area in the future. But likewise, we saw the addition of the Lucan area in the southern zone, which extends from the Dingo to the south. And that's, I guess, one of the things that we've seen in our current exploration, that there's more upside in that southern zone. We're expanding the current project to the south, as well as to the north. However, the main focus for this resource upgrade has definitely been what we see in the central zone and expanding that out to a much larger project, which will support that DFS. Now we've got a much larger throughput mill than we envisaged in the PFS. That's a really good outcome because we know that we can keep that full. And stepping forward to that, we can really just remind people of what this project looks like in that scoping study, and then we can come back and answer some direct questions on the resource and where we're going with this. As a reminder, the scoping study, which was a separate piece of work to the PFS that we put out in August last year, looked at a high throughput 5 million tonne per annum plant. It gave us on average 136,000 ounces per annum over about 10 years. But we saw in the earlier part of that production profile much higher grades and higher production, hence the relatively short payback period and the high internal rate of return of 46%. So these things are really quite important, particularly when we're talking about increasing the grade. We also reduced the stripping ratio by going through and calling a lot more of the material in that resource ore. And that was really an artifact of bringing the cutoff grade from a 0.6 cutoff grade that we've been using up until the PFS last year, and considering that the material between 0.6 and 0.45 grams per tonne is actually ore as well, even though it's a lower grade part of the ore body. And having the larger throughput mill simplifies the mining. It really does lower the stripping ratio. It simplifies everything. We put what we mine into the mill. And what we showed in that scoping study is that it was the same mine plan that we had in the PFS, but instead of handling ore more selectively, we were just putting it through in a very simplistic manner. As much as mining can be simplistic, of course, but really, rather than rehandling or putting on stockpiles or waste dumps as we had in the PFS, this was actually becoming part of the ore body. And you can see that with some of the production profiles there. And what we hope to see with this new resource upgrade, we've brought the grade of the resource that was used in the scoping study from 0.95 grams per tonne to 1.06 grams per tonne. So it gives you a bit more room for error, but it also improves that head grade overall. And it's really comes down to the improvements in the geological modelling and also improvements in the estimation techniques. So I think that's an important takeaway from this meeting today, is that what we expect to see is an improvement in that production profile and also in that head grade, because although we're lowering the cutoff grade, the actual overall grade hasn't dropped as much as we considered in that scoping study earlier this year in May. So I think that's an important takeaway here, is that although we've added a substantial amount of ounces to the resource, that grade was quite an important uplift as well, and maybe a little bit more subtle than came across in the announcement yesterday. Oh, sorry, I just... So really where we're at with the work programs at the moment, so the resource went out yesterday within the third quarter, as we announced previously. We've still got some work going on regionally, particularly in the lithium and rare earth space. So that's something that we're looking at, and there'll be some news around that in the not too distant future. But it is an ongoing part of the project, and assessing that large 5,500 square kilometre ground holding. 2,500 square kilometres of that is greenstone that we've mapped already. The feasibility study is tracking alongside that. We'll provide some updates in the near term on where that's at and what's happening with that definitive work program. And the permitting and approvals process, which is really important for the project. That's how did we turn this fantastic looking feasibility study into a mine. We've got people in the field at the moment doing seasonal surveys for fauna that will follow up with the flora surveys in the next few weeks, make sure that gets done by spring, and we'll start looking at the approvals process, EPA referrals and the like, and conversion of some of these to EMS as well to support the infrastructure. So there's a lot going on in that space. Some of it's not as sexy as fantastic resource upgrades or new ore reserves, but it's fundamentally important converting this into a mining operation. What is a little disappointing, our share price isn't reflecting that, but I think for investors now, this is definitely a buy. We've got a much larger resource base, our share price is a little bit down, and what we're seeing is, and I think there's some very good work and news flow coming forward that should support the share price in the near term. We've put a lot of work into this resource. I got some feedback that it took too long. Maybe it did, but we got it right, and that's what's going to support a DFS and our financing and building of this mine. So I think this has been a really important announcement, probably more so than people even give it credit for, but it's fantastic to see it exceed the 3 million ounce mark. We see it continuing to grow with future exploration. But again, definitely a buy. It's a standout in the market now because of its scale. It's one of the largest, if not the largest, undeveloped open cut mine in Australia. It's free milling, which differentiates it from a lot of our peers as well. So that's a really good takeaway as well. What the project looks like, I've gone through a lot of this, but it is quite a unique project. It's a wheat belt project. It's got its nuances, but we're close to a workforce. We're 3.5 hour drive. I took a team down there yesterday. We could do that in a day quite comfortably. It's really fantastic operating conditions, well supported by the local township of Katanning. They're very supportive. We've put in our community consultation notes up on the website if you're interested, but it's overwhelming support for the development of this project. And I think that's really also quite important that we do have that local support for a new industry in this town, because we're going to be working with them over a considerable number of years once this project's up. It's also quite great to see that we've got access to that community, a workforce, and that housing and energy and all sorts of other things that come in alongside that. We continue to look at outside our main resource. There's a large ground holding. We've talked to the exploration potential for gold and lithium in previous announcements. I won't go through that too much today, but we'll continue to update the market on where that's at. We've been really advancing that lithium prospectivity, and there'll be some news in and around that too, because I think we've identified 14 advanced targets now that we look to expand into programs in the near future. So again, there's another, I guess, an aside to the resource story that generate value for shareholders. So I'll try and wrap it up there. And really just round off what the project is. It's 100% owned. It's the largest undeveloped project in Western Australia, 3 million ounces, large ore reserve, a long life of mine. We look at expanding both that ore reserve and the resource in the future, although we're really pleased with where we're at today. That DFS is well advanced now. We're looking at the 5 million tonne option as our main case. And we'll continue to expand the current resource and work alongside that. So thank you for your attention tonight.
Thank you very much, Matt. It's a great story, and we'll go to questions. Just a reminder to everyone who is listening in, please fire in your questions. I can see a few coming in now, so let's get down to the business end. Matt, if I could just start with one, you put up a great chart there where you showed the ounces going up and the grade going up, and the meters drilled going down, which is always a nice thing to have. It means you're finding ounces more cost effectively. What's changed in terms of your understanding of the deposit, the geology, the geometry, etc., that's helped you to refine your targeting and achieve this result?
Yeah, look, I guess there's a big shift. You can see that from that 2017 period when I got involved with the project, we started applying a lot more science. The drill meters were fairly modest in those first couple of years, and we tested a couple of key target areas. I split the difference in 2017-18. We had a look at both the central and southern zones. There's 2 very compelling targets there. One was quite conceptual, and that was the Jinka South area. And the other one was the Lucan area that we've just actually added to the resource today or yesterday. There was not much debate about when we got 26.6 at Jinka South, and we followed up with a number of other significant intercepts along strike from there. And that has been the real focus, and you can see that spike in drilling between 2019 and 21. And that focus of drilling was to test that target, expand it out, apply things like downhole EM, which was really an important tool here. It saved a lot of drill meters. It's quite a discrete ore body in a lot of senses, but when you're on those high-grade zones, and if you can use downhole and airborne geophysics to target it more precisely, can be quite surgical in a sense and hit those zones of mineralisation, extend them along. Now, you mentioned that the drill meters are going down. Well, we've advanced and dropped the drill spacing in a lot of areas. The last season was heavily focused on converting areas of inferred that were fallen in the first few years of mining into indicated or measured. And that's important for financing, for due diligence from other parties. But importantly, What we've found is that we've refined the geological model here. We've been able to constrain the grade, and these high grade zones are what you want, but they're also, you've got to handle them with care because we don't want them bleeding out to the low grade, and we also overestimating the resource, and likewise trying to get a realistic estimation of both the grade and the tons of those high grade zones is super important because, as you saw with the production profile and that grade chart, if you get that wrong, it will really distort the whole project and the finance and cash flow going forward. So that we've always been on the side of conservatism there. This model is, in fact, actually probably more conservative than the previous one in a lot of senses, but the estimation technique is more robust as well. So I think we're very happy with the results here, but we also see some opportunities to build out that resource in the future.
Thanks, Matt. We'll take some questions from the floor now. The first one here is from Lindsay Mullins. He said, congratulations on the growth potential. Good to see some gold exploration getting some reward at the moment, and projects being de-risked. What do you see as the major risk to the Katanning operations into the future?
Thanks, Lindsay. Look, there's always lots of risks with mining. We're looking at the community very carefully and not taking that for granted. It's, as I mentioned earlier, that the community, environment and the like are all very important parts of this project because it's in a unique setting. It's wholly located on agricultural land. We've been working very closely looking at land acquisitions in and around the project as well, and that will form an important part of the advancement of the project through permitting and development. Having said that, a lot of the environmental agencies view this region as environmentally degraded because it's clear for agriculture. So we've actually got some less hurdles than other projects. We're not actually doing very much vegetation at all. That's mostly on agriculture. But the negotiations around that are super important. Likewise, there's all the external risks that any project has. But we're seeing pretty good gold price in Australian dollars, and I think that helps move these projects along. And what we want to see is, the Ausgold story get out to as many people and get that support in the market so we can finance this project.
Thanks, Matt. And just building on that sort of forward-looking next steps path, a question here from Ming Lim. What is the timeline for first production and your financing plan to move the project into production? And also, is there any plan to drill the rifle range?
Yeah, hi, Ming. We have put some drilling into the rifle range, and I'll just answer that second part because it's the easiest part first. And look, we've put some work in there. It's not an immediate priority for us. We see some better and easier targets outside that zone. We have spent a bit of time and effort trying to understand what's going on between the central and the southern zone, and that's still a body of work that's sitting out there. But at the moment, the rifle range we're not saying is a priority, but it is, and particularly on those long sections, looks like a tantalising target. But rest assured, we have actually thought about what's going on there. We see opportunities within the central zone and the southern zone probably take priority over that in the short term, at least. In terms of production and financing, really the important parts there are the permitting process, and I alluded to that in that previous question. We're working through the seasonal studies this year. We'll refer this project through to the EPA probably in January next year, and that process has a period of time to run through probably 2024. And the work on the financing side is running in parallel with that, but obviously the permitting is essential for that to come about. And once that process is complete, and hopefully we can shorten that time frame as much as possible, construction will take about 18 months.
So on that basis, you'd be looking at sort of late 26, something of that order?
Look, it's hard to put a number on it. The DFS will give us a bit more precision around that, but that's if I did a thumbs up something like that.
Fantastic. Keep your questions coming in, everyone who's listening. While we've got Matt on the hook here, we'll make sure we put all of them to him. Next one here is from Rod Siller. What is the depth to the top of the ore body, please?
Hi, Rod. Look, the top of the ore body essentially outcrops. There is some stripping in that initial, I think, 3 months of pre-production mining that we outlined in the PFS. But when you actually look at the front page of that historic pit, they were mining that, and that northern wall of that is 3 gram ore. So it's the high grade zone actually comes to the surface, and I guess that really explains some of the financials on this project with the internal high rate of return. Is that we're seeing fairly early cash flow from those areas of, putting in that pre-production mining alongside the construction. You're getting material that you're going to use for your tails dam and the like at that time anyway. So it's not like we're going to do years of pre-production mining. It's a fairly short period that we start getting into that ore zone.
Fantastic, thanks very much. The next one here is from Brenton Bacon. Have you had any inbound interest from other companies and or funds after this latest announcement?
Look, we will continue to get interest in the project, of course. I can't allude to the specific parties, but look, we are open for business, and we talk to people who come through the door or approach us. It is definitely getting on the radar because of its scale. When just looking at that site I've got in front of you there, when I first joined the company, I was told 1 million ounces is what I needed to get on the radar. And then we gave them 2, and then now we've given them 3. It's definitely on the radar. It's a growing, evolving story. I've got a very bullish view on the scale of the project and the region. It's a region that hasn't had much work prior to this really intensive exploration at the Katani Gold Project. I know, at least on the technical side, there's a lot of interest growing in this southwest part of the Yilgarn. That's alongside us, Chalice, and obviously with the energy metals, things like Greenbushes really are catching people's imagination about what could be in this new region. That's, we're leading the charge.
Thanks, Matt. We've got a skin in the game question here from Thomas Schultz, which I know is a touch point for investors. Does the board hold shares other than performance-based shares in the company?
Yeah, we do. And I was in the market a few months back before I got wall crossed with the current resource. Unfortunately, paid a lot more than it is today. But I'd like to see it that I was buying them cheaply in the future. So that's it. This is my largest investment outside my house, really. So I do have skin in the game. I know a number of our other directors do as well. We do have some performance rights out there. But look, we go into the market and buy. We believe this story wholeheartedly.
Thanks very much. Got a question here from Peter Pines. He says the company has been criticised in the past for lacking urgency with its progress and missing some deadlines. How do you respond to those views? And do you think this is beginning to be reflected in the share price, and what's being done to combat that?
Look, thanks, Peter. Yeah, look, there was some criticism. We've delivered this resource within the third quarter, as we said. I would have liked to have seen it before diggers, to be honest, but I also believe the work we did in the interim period was incredibly important for the quality of the outcome. So I'd say that there was a high level of urgency in that process, even that may not be evident. Everyone wants things yesterday, and that's good, but I think getting it right is more important. Likewise, the PFS, personally, I lost quite a lot of performance rights by doing that work over a longer period. We missed probably that deadline for 2 weeks, but the importance was we got a very good outcome because we went down and did a couple of other portions of that scheduling that just took a bit longer. And really, in that, amongst, I ended up with COVID halfway through that process as well, which was awesome. But, I prefer for our shareholders to get an answer that we can hang a hat on rather than push out something quickly just for my own personal gain. I try to think more holistically for the company and shareholders.
Thanks very much, Matt. Someone did send me a question on Twitter earlier, just if you could give some sort of update on when we'll hear some more news on the lithium front, the lithium evaluation.
Yeah, that's good ongoing work that's happening there. Look, we've done a lot of early stage work to date. We've done a 600 sample stream sediment sampling program, which works better in some areas than others. We're evaluating that at the moment. There's people on the ground at the moment. We've got a couple of geos committed to the lithium side to understand what these samples are telling us. Now that we've got about 14 good targets, I'll come out with the market with a bit more of an update and some colour around that. But before we did that, we just wanted to understand what those results are. So the guys are actually going on the ground, mapping out these new anomalies. And we did that with RFC Consulting as well. But our guys are doing the mapping on the ground. We're doing a bit of extra sampling in those areas to make sure that we're not deluding ourselves. But there are some exciting things coming from there. We are mapping out a lot of pegmatites in the belt. Some of those have got some interesting chemistry that we're evaluating and just trying to understand what that all means. But to put it in context, 600 samples, over the best part of 5,500 square kilometres. Each sample represents 100 square kilometres. So, if you look at it that way, those target areas need a lot of refining before we get to the dual targets that we want to get to this year. But we are working on that. There is a lot of inbound interest on the lithium side, of course, and that's something else we're looking at as well.
Thanks very much, Matt. Just one sort of follow-up question on the regional exploration front. It's clear and thanks for the opportunity to visit site yesterday, it's clear from going down there that not just the scale of the main deposits, but also the size of your land holding, which is obviously in a very underexplored greenstone belt. How do you see that regional and sort of near mine, if you like, exploration piece unfolding, in parallel with, I suppose, the development of the main asset, which is obviously your key focus?
Yeah, that's a good question, and it's a complex balancing act between, as Peter was alluding to, are we getting distracted and not focusing and pushing this through? I can tell you we're committed, and with Jeff at the helm as chair as well, really pushing those studies through the works. The regional side, I think, is a bit of a sleeper there, and we've already seen some inklings from areas like Stanley and Duggan. There's some very high-grade results outside the current resource. Now, they're not playing by the same rules. They look a bit different to the main resource. So we're, working through that in a good sort of risk management approach in terms of exploration. But in and around those areas, there's a lot of other things going on, and in terms of lithium and potentially rare earth space as well. So we're seeing some things in those areas in the greenstones that off that main trend that I would say we don't fully understand, and that's okay. We've just got to be systematic about it. We've got 10 years of mine life here. We've got a couple of years to build the mine. What I'd like to see is, the mine life extended through that exploration success, filling, the back end of this mining operation. So this is not just a 10-year mine. It's a lot longer than that. And I think we've got the opportunity there. We've got some great targets, and some of those targets will move to resource in the not too distant future. Data Time was one of those. It was a small resource. It's become much more significant in this current announcement. We expect to see some growth out of there. Areas like Burrum, which is to the west. Again, there's some unfinished business there, and again, on that same structure, we're seeing that Stanley project as well. So there's a bit more going on in this belt. We're learning things every day. We're applying good science. I want to see that sort of really cost-effective exploration continue. There's a real risk that your cost per ounce goes through the roof at this stage. I'm trying to keep a rein on that. But I think there is a real opportunity not to just get caught in that brownfield circle where you're drilling in under your ore body, but also to step out, because we do have some fantastic quality targets that will support the operation in the future.
Thanks very much, Matt. That was a great run through. Just to quickly conclude, you do have some important investor relations milestones coming up. I believe you were at Diggers recently, in a sign that the story is getting a lot more recognition, and you're off to the Beaver Creek Forum, I believe.
That's correct. Yeah. So we're trying to get in front of as many potential shareholders and funds as possible, and I think telling the story, being a great story it is, and I think has been flying under the radar, is a great position to be in.
Fantastic. Well, great to have you on this morning, Matt. Thanks for your time, and thanks for taking us through the Ausgold story. It sounds like this story has got a long way to go, so we'll be following progress with great interest. But really appreciate your time this morning, and thank you everyone for joining us. Ausgold, there you have it, a WA homegrown story just south of Perth, just about to hit the launch pad on what should be a fantastic few years ahead. So thank you for joining us, and a replay of this webinar will be available a bit later this morning. Thank you.
All right, thank you.